Getting started with investing. I'm excited for this one. Let's talk about it.
I think one of the basic principles is always invest for the long term, right? So with all this meme stock frenzy and with Robinhood traders, coming in, we tend to see a lot of people are looking for short-term trading. I think that's a mistake. Most people lose money that way. Have a long-term time horizon. The S&P 500, there's never been a 20-year period where the S&P 500 has generated a negative return. Rather than going for individual stocks, because that can be risky, get a feel for the market with ETFs and then, dip your toes more with individual stocks later. So you want to make sure you're diversified properly to recover with the market. Market drawdowns are sometimes the best opportunities, right? It's not only the best opportunity to buy good quality companies at 20-30% discounts, but it's also a good opportunity to implement certain strategies such as tax loss harvesting. Don't be afraid to sell a stock, book profits, take some money off the table. No individual stock should be more than 5% of your portfolio.
That is great advice. For any of you out there who are maybe just getting started with investing, or you want to get started with investing but you're not sure where to start, one thing I always like to talk about that I think personally is the best investment anyone can make when it comes to the stock market is ETFs. Now, there are many different ETFs out there, but some of the best ones I think that most people can just set it and forget it. I mean, opening an account, picking an ETF, having your money automatically withdrawn from your checking account and automatically invested inside your brokerage account is one of the best ways to build wealth. And then some of the ETFs you can start looking at to get an idea of what I mean. I'm not saying to go automatically go buy these, but these are the ones that I like. And that is VOO, which tracks the S&P 500, or VTI, which tracks the overall stock market. And I also like to add a little bit of international exposure in there as well. So something like VXUS is made up entirely of international stocks. So not only do I have all my eggs in one basket in the US stock market, I also have a little bit of investments that spread throughout international stocks as well that make up that ETF VXUS. But yes, he is 100% correct. The best way is to set it, forget it, and invest in good quality ETFs. Because let's be honest here for a second, most hedge funds, the guys who do this for their full-time job, are unable to consistently beat the S&P 500 year over year. So if you can't beat it, join them. Just buy the S&P 500, sit back, relax, and never have to worry about investing again in your life. Now, when it comes to the stocks side of things, for those of you that have been around my channel for a while, I used to talk about stocks all the time. I've since then pivoted because I just no longer feel like I wanted to talk about that with individual stocks and everything like that. I wanted to get back to my roots of helping people manage money, personal finance, and getting started with investing, and I'm glad I made that move. But with that being said, I think he's 100% correct. If you're brand new to the stock market, buying individual stocks is probably not the best way to go because you just don't understand it yet. Once you get your foundation set, you're understanding how the stock market works, you have a good solid foundation of ETFs built up in your portfolio, and you're still consistently investing into those ETFs and building up that foundational portfolio, well, then maybe it's time, like he said, to dip your toes in and start maybe buying a little bit of individual stocks.
If I were investing my very first dollars in 2024, here's where I'd start. First, I'd check if my company offers a 401k account. This is an amazing place to start because your company might match your contributions to that account, making it essentially free money and giving you so much more bang for your buck. If they don't offer a 401k, look into opening a Roth or a traditional IRA. This can have some tax benefits, which can also save you money in the long run. If neither of those is an option, try to look into a traditional brokerage account. There are so many sites out there and they are so easy to open, from Fidelity, Schwab, Vanguard. Just make sure you pick one that doesn't cost you any fees. Once you do that, put in some money and pick your investments. Experts typically recommend diversified bond and stock funds like index funds. And the last step, this is important, make sure you automate your investments. That way, money will be going from your paycheck into your investment account monthly without you even knowing it.
She nailed it. Perfect. I mean, her advice was perfect. I agree with that 100%. One thing I want to dive into a little bit, since we already talked about the ETFs and the taxable brokerage side of things. And if you guys have questions, leave them down in the comments. I'll try to be answering as many comments as I can on this one whenever this comes out. But what I wanted to touch on was the Roth IRA, guys. I think that is one of the most beneficial accounts to us US citizens out there to help us grow wealth. Because with a Roth IRA, basically what happens is you're putting in post-tax dollars. So this is income you've already paid taxes on. It goes into the Roth IRA, which is a retirement account, and all the growth you have in that account grows tax-free. So if you start this account with $100 and then over the lifetime of your working life, you grow it to be $1 million, you don't have to pay any taxes on that $1 million, and you can literally live off that your entire life. Or, well, depending how inflation is come that time. But you get what I'm saying here. That's why I'm such a big fan of the Roth IRA, and it's such a powerful investment vehicle that if you are working and making income, you have to open up a Roth IRA. Now, one quick tip here on something that I wish I would have taken advantage of when I was younger is when you start working, you can open a Roth IRA. So if you're 15 years old out there right now, or maybe you're a parent of a 15-year-old and they are working, creating an income, you can open them up a Roth IRA and they can start investing in that. And the best way is just to buy a market tracking ETF, like I mentioned, VOO, VTI, something like that, and just set it and forget it. But just the fact that they're getting started at 16, 15, 17, 18 years old, that's going to benefit them so much, because one of the biggest factors when it comes to how much you can really truly grow your wealth in the stock market is by how much time you have to let your money grow. The more time you have on your side, the better off you're going to be. So the earlier you can get started, the most likely the better performance you're going to have in that portfolio.
We'll just buy a Vanguard no load S&P 500 and hold it and don't ever sell it.
There you go. And the more money you have, just keep reinvesting and reinvest the dividends, and over time you'll do okay, which is really my whole 401k. You know what I'm saying?
It's sad to say, but like at the end of the day, unless you're a professional investor that's on it every second and like you just really know what you're doing, it's just been proven. Even the most successful hedge fund managers can't beat the S&P over the long term, and especially when you're including the fees they charge, the commissions, the tax advantages of buying and holding and reinvesting dividends. So you're going to end up much, much better off. And it's been mathematically proven. You simply buy the S&P and just hold it for 30 years.
Jordan Belfort, love him or hate him. I mean, that right there, that advice, I do have to agree with. Like, I mean, that is prime best investing advice you can probably give, is buy the S&P 500 and hold it for the long term. I will also add in there, though, I'm starting to be an even more fan. Although I love the U.S. economy, I love where we're at, and I love this country, I also want to have exposure internationally. So I do try to make up a certain percentage of international ETFs inside my portfolio. Build up a solid nest egg of ETFs before you even think about investing in individual stocks and stuff like that. Now, what I do want to do here is I do want to share with you the Robinhood portfolio, right? So this is my Robinhood account, right? This is my fun, my individual stock account where I do my options trading and stuff like that. Now, again, I want to reiterate, it is very important to have your foundational account before you start getting into individual stocks and especially options and stuff like that. But once you have that foundation set up, then yeah, if you want to have some fun and buy some stocks and start learning how to sell options or whatever it is, then so be it. This is my account, $65,000. And for the past year, I'm up 48%. Now, guys, I share this, but I want you to also understand this could turn around and go negative any second. This is the reason I'm showing you this, because although, yes, this sounds all cool and exciting, you're making money, but with that, you have to understand is that what can go up can also go right back down. So that's why I wanted to share that with you guys, is to say, although you may hear your buddies talking about it at work and you may get excited or you may have FOMO or whatever it is, just understand how important it is to stay on your path of long-term investing, right? Even in this Robinhood portfolio, I have positions that I've held for, many years. And that's because at heart, I'm a long-term investor. I'm not a day trader. I don't swing trade. The only type of trading I do is selling options for premium, for income. That's the only type of trading that I do. And then I'll buy leaps, but although that's even a long-term position as well. That's buying calls that have a 1+ year expiration date out before they're set to expire. That's fun money. That's not anything that I would recommend jumping into right away. Like we're strictly talking about long-term investing here. And when you go to buy a company, I want to say buy something that you want to be an owner of. I started off buying companies that I used, right? I had an iPhone, so I started buying Apple stock. I loved Frank's Red Hot sauce, so I bought McCormick. Like I'm not lying. That's how I got started in buying stocks. is I was buying stocks that I was a consumer of. I love Nike shoes, so I bought a little bit of Nike. Like I started picking up stocks that I was a consumer of, and then from that, I use that to kind of teach myself, okay, well, how do I value this company, right? How do I look into this company and make sure it's not overpriced? Where do I think the trajectory of this company is going? Do I think this is a good investment? But that's all fun stuff, right? Like you can skip all of that. You don't have to do any of that if you just strictly invest in ETFs. I do this because I love it. I have fun researching companies, valuing stocks. Like that's the stuff I like to do. But 99.9% of us just need to focus solely on investing in ETFs for the long term and not get messed up in all this crazy stuff, because you can mess yourself up financially if you do go into this too crazy on the more riskier side of things, which is investing in individual stocks and crypto and all this other stuff. You just have to be careful when you're getting into those types of things, especially as a new investor, because it's very easy to get caught up in the hype and then lose your pants.
Any word of advice you give to somebody who's a young investor who would like to emulate you, what you would recommend that they do to kind of build something close to what you've done?
I think you should look for the job that you would want to hold if you didn't need a job. I mean, you're probably only going to live once. Shirley MacLaine may differ with that, or a few people, and you don't want to go sleepwalking through life. And you really, whether you make X or 120% of X, really isn't remotely as important as to whether, in most cases, you marry the right person and you also find something that you would do if you didn't need the money. And I've had that job for 50 or more years, and I was lucky in that I sort of found early on what turned me on that way. But don't settle for something if you can possibly. Don't worry about making the most money this week or next month. I mean, when I offered to work for Ben Graham, I said I'll work for nothing, and I meant it. I mean, just the idea of being turned on. So look for the job that turns you on. Find a passion.
Oh, Warren Buffett, the investing legend himself. Guys, I saw that clip and I had to add it in there because that is probably some of the best advice that I've ever heard. And the reason I say that is because I remember when I first started getting into the real world, and I started my big boy job as a civil engineer, I was looking for an escape, right? I wanted out. I hated the job I had. I hated what I was doing. And all I wanted to do was make enough money to get out of that job. And when you have that mindset, first, I think when it comes to the investing side of things, is you want that quick dollar. You want the quick money because you're like, oh, if I can just keep doing this, I'll be able to get out and be able to retire my family and do it. That's probably one of the worst ways to look at it. I remember making so many mistakes early on in my investing career because I was trying to get that quick dollar. It is what it is. Like I'm being 100% honest with you guys. I started investing back in 2014, and I made so many stupid mistakes, guys. And I still make mistakes to this day. But back then, like I wanted the quick dollar. I had the FOMO of everything missing out, and it was one of those things where I wish I would have heard that advice sooner. Like before I got started, because I could have saved myself a lot of money and a lot of nights of just being pissed at myself for doing stupid type mistakes. But to get back to what he was saying, what Warren Buffett was mentioning is finding a job that you love and have a passion for. I think that cures everything in life. Now, for me, I do YouTube full-time, and I'm also a mortgage broker. And I recently started this mortgage broker stuff, which, by the way, guys, if you're looking to buy a house or you need financing, reach out to me. My email is jj@firstteammortgage.com, and I can try to help you out if you guys are interested in that. But I truly love what I do, and I'm so lucky that I've found this path because I've always loved the real estate world. The viewers of mine, you guys have been around me for a while, I love real estate. And I'm so excited to be a part of that industry now, and it just feels good because I have a passion for it. Every day I wake up and I'm excited to work. I am, and I feel so lucky to have that. But it's taken me, what is it? I mean, it's taken me 10 years of my professional life to figure out exactly what I want to do. Now I've done YouTube full time, for 4 or 5 years now, and that was a lot of fun. But long term in my life, I knew I wanted to be in the real estate world, so I'm so glad I took that jump, and I'm now officially doing it, and it feels good. But sometimes that's what it takes. Like if you're in a job right now that you hate, and you're strictly just looking to invest because you want to get out of that job as fast as you can, so you're trying to look for that quick dollar, I say put on the brakes, guys. Put on the brakes, and instead of focusing on trying to make that quick dollar, use that time to try and figure out an industry that you are passionate about and that you want to work in. That's, I think, what the ultimate goal in life is, to figure out something that you do for work that really doesn't feel like work. That's such good advice that I had to share it with you guys here, because once I figured that out in my life, and it took me a bit to figure that out, it's literally has changed my life completely in such a good way. So if you can find a job or an industry that you know you're passionate about, I want to challenge you to take the leap and just try and go figure it out. Now, if you got a lot of financial, mishaps that you got to clean up first, use that as motivation. Stay in your job, clean up the financial mess you've put yourself in, and then let that be your motivation to get that cleaned up, so then you can go take the risk of making that leap to going into a complete new industry and seeing what happens. Because you don't have to see, when you get caught up in this financial mess and you're in, car debt and all this other debt, and you hate your job, well, you're stuck there. You got the golden handcuffs on. You can't leave. But when you clean up your financial mess that you're in, you can get rid of those golden handcuffs, and then you can go take that leap of faith to do whatever the hell you want to try and do and see what your passion is, or find a job that you love.
More and more teenagers are starting to put their money into stocks. The brokerage firm Charles Schwab says that custodial accounts for teens totaled more than 300,000 last year, and that's up from nearly 200,000 in 2022 and 120,000 in 2019. Do we have Sharon with us? I think Sharon Epperson was going to join us. We do. So this is good to see you from D.C. This is an interesting development. A 50% gain, I guess, in custodial accounts at Schwab, indicating that people are saving more and more, I suppose, for their kids' education and beyond.
Well, teens, I think, are starting to realize, and their parents are realizing for them, that there's no real secret to building wealth. The secret is investing. And you need to invest in the future. But many of the teens, I think, are looking, at least from some of the reports, are looking more at the immediate gratification. What can I invest in now that's going to get me a good return in the next year or so that I can buy a car or afford an apartment or those types of things, more day to day than the way that many of their parents started investing, which was for their retirement. I think one of the great ways to get teens to be able to do both is to be investing in a Roth IRA, because if you open a Roth IRA for a teen that has to earn income on their own, you match that money. They're learning that this is delayed gratification. This is money that is supposed to be for the future. So I think that that might be a way to combine the long-term saving and the investing at the same time, but understanding also that you need to be saving money just because you never know when you need it for the rainy day. That idea of having the emergency fund, I think, is one that teens need to understand as well, so that everything's not tied up in something that should be a long-term investment, money that you're not going to need for 5-10 years or more.
Yes, big believer in the Roth IRA. I think that is one of the best investment vehicle or accounts out there. But if you are wanting more access to that money relatively quickly, or you think you want to be able to tap into that money when the kids grow a little older, I think a custodial account is another great account to open up for your child if they don't have earned income. I have that for both my son and my daughter. I opened them up when they were both, under a year old. And what's cool now is, now that my son's 7, he can sit down with me and him and I can discuss the stocks he has, the ETFs he has in his portfolio, predominantly made up of ETFs, but every now and then he likes to buy a stock that he likes of that company. He loves Tesla. He's loved Tesla his entire life since he's been like 3. I have videos on here to prove it. But he does love sitting down with me and look at his account, seeing me purchase more stock in his account with money that he's put in there and also that I put in there as well. But what that does is that goes back to that time frame that I was talking about earlier on in this video, is that gives them a longer time horizon for that money to work for them and to grow. And then as far as opening up the custodial account, I have that with Vanguard, is where I have all my retirements and custodial accounts and all that. So if you are looking or interested in doing that, just contact Vanguard. You can call them up and ask them how to fill out the account, but it's also relatively simple to just do it yourself online. But if you're not sure how to do that, or not sure you're maybe scared that you're going to mess something up, you can simply call Vanguard and they will help you through that process on opening that account. But guys, that was a fun one. I love talking about investing. What I need from you is, if you guys enjoyed this video and you enjoyed these investing topics as well, I would love to keep talking about them on a real estate basis, on a net worth basis, on a stock basis, or just general investing topics. Let me know down in the comment sections if you guys, one, found value from this video, but also enjoyed these topics as well, because I can add these to the video pipelines. But with that, guys, thank you so much for watching. I really do appreciate it. And until next one, you all take care.